Hi, welcome to yet another series in the webinar series of Get More from Mallapuram. And the agenda of Get More from Mallapuram is only to serve the society for giving the clarity such that they will have confidence on whatever the policies they have already purchased or planning to purchase. Okay, so let us now get into today's webinar series that is Get More from Mallapuram. And the topic, and before we get into the topic, let us do our rituals. The purpose is only to create clarity of whatever the policies that people have purchased or planning to purchase, such that they will have the confidence on whatever the policies they have purchased. Okay. So the declarations, even before we get into the presentation, right? We would love to declare that we do not represent any one insurance company. We don't represent any insurance company. Okay, and we will be discussing only issues related to insurance only in this webinar series. And we are not intended to criticize a particular person or a product or an organization in this particular webinar series. But just in case if that happens, then it is only by chance, but we don't intend to do that. Last declaration. Options and opinions which are discussed here are purely personal, and you can't take this as an evidence under any court of law. So these are the declarations which we always do under our webinar series, that is Get More from Mallapuram. So coming to today's topic, so how much of health insurance do we need to take? Okay, and so how much is required? How much is required for us as a family, or covering ourselves or our parents or our family together? Is it an individual policy that we need to take, or is it a group policy that we need to take as a family, as a unit? What is that we need to do? Okay, and before we get into the complete analysis, let us have an agenda of today's webinar. So first, we will be doing about the situation analysis. So we will see what are the situations which are prevailing at the health insurance industry, and also with the people who are planning to purchase or who have already purchased the health insurance policies. Then we'll discuss about few points, few value additions from our side, and that is only to provide the clarity for confidence. So this is the major section under the entire webinar series, and then we are going to do a review, and we are going to decide on the action points what you are going to do after this webinar. Okay, so the situation analysis. Coming to the situation analysis, let us see what is prevailing in the market. If you just look out here, the yellow bar which is out there is the out-of-pocket expenses. So people who are actually spending their own money from out of the pocket for all the medical expenses. Okay, and if you see that, though the total medical expenses are actually growing over the period of time, if you see it out there, it is actually growing over a period of time, but the out-of-pocket expenses are actually growing even more. And it is estimated that almost 87% of total expenses which are happening in the medical treatment of different people, it is actually going out of the pocket. And this is the main reason. You can actually go to any of these finance institutes wherein people give loan against the property, loan against the gold as an asset. So it seems 90% of the people who are coming there to pay the medical bills of their loved ones. Okay, how can we just leave our family member for fate if there is any emergency and they get hospitalized? We would definitely love to do what maximum can be done, and we want to provide the best health insurance. We want to provide the best healthcare services for all the family members, right? Isn't it? Okay, if it is yes, please type yes in the chat box. Oh yes. Yes. Oh yeah. We are seeing a lot of people who are typing in yes. Great. So this actually gives us the clarity that each of us, whoever it might be, we want to provide the best healthcare services to our family members in case of any emergency. right? Okay, now getting back to the presentation. So if you see it here, so we have this out-of-pocket expenses which are growing very high, and then at the same time, if you look into the total amount of expenses which happened from the medical insurance part, the maximum portion is actually getting attributed towards the government reforms. So government is actually spending a lot into the health insurance programs. There are state-run health insurance programs which are given by almost every state in entire India, right? And if you see the black portion, the thick black portion is nothing but it is the amount of expenses as a medical insurance premium which is spent by the corporates. So if you see your corporates are actually, they also give the medical insurance for the employees. Okay, so that is that portion, and it is very less when we compare to even the group insurance premiums which is paid. The individual premiums are very, very less. Okay, the individual premiums are very, very less. This shows though there is an emergency need, though we all know that some or other day if there is any emergency we need to get hospitalized, treat ourselves, that is something which is mandatory. But even after knowing that, people are not spending their money on having a health insurance policy. This is what the presentation says. Okay. So if you see the graph over there, the major portion is only by the government, and then comes your corporate insurance, and then comes your personal insurance. Okay, and this is the spending structure. And if you see the situation analysis over here, the medical cost is actually increasing at the rate of 7.14%. This is the overall inflation, which is way high the inflation of the country. But this is something which has been recorded. If you look into the real expenses which are actually happening, the real expenses, if you look at the people, they actually say that it is almost close to around 15%. Because 15% is something which is not recorded yet, but if you actually calculate the expenses which are happening, the medical inflation in the recent past, it is almost 15%. Okay, the recorded things, if you look at, it is actually 7.14%. And out of this particular thing, if you see the major contribution to the increase of the healthcare services, it is actually the hospital and the nursing charges, because that is increasing almost close by 9.4%. That means almost we can take it as 10% every year. 10% every year the hospital expenses are increasing. So that's the cost which is building up, right? And if you see the medicine cost is also been increasing. The same medicines which you used to purchase earlier, now the medicine cost has increased by almost 7.2%. And 80% of the people who have taken their personal insurance policies, less than 3 lakhs is the sum insured what they have. Okay, but if you look into any of the expenses which are going on, it is as good as close to a minimum of 5 lakhs and above. But the average sum insured what we look at, it is just 3 lakh rupees which is out there. Okay, and more than 95% of the people, whoever has actually purchased, and you definitely agree with me, whoever has actually purchased, 95% of people, they always look for only the least cost premium. Least cost premium, what is the little that I can pay just to have a kind of health insurance with me, but they don't look into the real facts on whether it is actually covering the entire family and covering the entire family from all the risks. Okay, so almost 85% they look for only paying less. Whatever is the little sum assured, it is okay for them. So this is the situation what we are in. And moreover, what are the premiums that you pay? Government wants people to save tax legally by giving you the medical benefit, the tax benefits for what are the premium that you pay. So I think it is up to some 25,000 rupees if it is the self and the spouse and the children if you are taking care. And if you are paying for the parents, and that if the parents are senior citizens, then you can actually claim up to 55,000. Okay. You can actually check with your tax consultant or your chartered accountant on these tax rules. But there is a tax benefit for whatever the premium that is paid for the health insurance policies. Okay. So this is the entire analysis, the situation analysis. Now, Now let's get into the real the challenge and the real discussion, that is the clarity for confidence. This is the section of the entire webinar where we will be discussing on the real facts and the figures, wherein you will have some clarity such that you can have confidence in actually going ahead and delivering the services or purchasing a policy or reviewing your existing policy. Okay, so let's get into the discussion, right? So the discussion begins. The first and foremost thing is the point which we all need to consider. We all need to consider this particular factor in actually analyzing any of the investments or also even your health insurance, and that is nothing but your inflation. So inflation is the one which actually eats away the value of your money. The value, whatever that is there within the money, that is actually being eaten away by inflation. So if you look into the healthcare cost which is rising, say suppose a particular if you can see it here, a particular person has actually taken a health insurance policy. Let's take 5 lakh rupees, okay, just for an example. And say suppose he is keeping on paying the premiums over the period of time, continuously, right? And let's say suppose he paid it for say 5 years. But if you see, if the average, for an example, if there is a treatment which needs to be taken care, say 5 lakh rupees is the current cost of treatment. But that cost of treatment is actually increasing over the period of time. If you see it there, it is actually increasing over the period of time, right? Okay, but your coverage seems to be still the same. So at a point in time in future, if say suppose if we were to get hospitalized and go for a treatment, if you're going for the treatment, the sum assured required to cover the increased cost of the health treatment will not be sufficient. Because the cost of treatments is it is continuously increasing, and this is all because of inflation. And to even go further, like if you look into the entire the cases which actually come for the claim processing in the different insurance industry across Asia, if you look at cancer still tops, okay, out of which 67% is being paid. The expenses are because of an inpatient treatment, and then comes the diseases of your circulatory system, and then comes the diseases of the gastroenterology, right? And then the infectious disease. We have seen the pandemic nature which has come in. Because of this pandemic, people have actually realized the importance of insurance. And we have seen the cases wherein the hospitals have charged 20 lakh rupees, 25 lakh rupees, and people are so panicked. There were very little number of services available, and then the infection was growing a lot. We have seen all these situations. After even seeing that, if we actually look into the entire scenario, I think even apart from being pandemic, the highest cost still which is out there is actually the cancer, the disease of the circulatory system, that is coronary artery surgery or heart wall replacement, any of those things, and then even the respiratory infections. Of course, the respiratory infections, much of the diseases, it seems it is being taken care because of the outpatient treatment. But these are the top five expenses which are actually happening, and these costs are actually increasing over the period of time. The increase is actually almost 7.13%, almost you can say roughly about 8% is actually increasing year on year. So how are we going to take care of these expenses? And if you look into the regular expenses like the oncology, the cancer care treatment, per chemotherapy, it is almost costing around 63,500 to almost 1,09,000. These are the figures which we received, and it is available on Google. You can just go and see it. It has been published by Economic Times. Okay, and then you can see this. These are the costs which is out there. And if you go to the cardiology related thing, the transplantation which is going to happen, so these are the expenses which are out there. So 5 lakhs for a particular hospitalization is something which is like the minimum bare requirement which is existing right now. Okay, and let us look into the case study now. Okay, so here is a case study wherein the person here, a young family, wherein two adults and two children are there in that young family, and the husband, say suppose, aged around 35, and then wife aged around 32, and first child being aged at 5, and then the younger one is at age 2. So, small happy family, right? Okay. If say suppose if there is an inflation, right? How inflation is going to affect the family and their health insurance coverage. Okay, so let's have a case study on this. Okay, so this is assumptions which are taken, and we don't want anybody to, let me be very clear and upfront with you. We don't want anybody to get hospitalized, because getting hospitalization is not so great. It is not so happy moment for anybody's life, and we don't wish that for anyone. And whatever that we are discussing here is only as a case study. And so this is an additional declaration. So we don't intend that anybody to get hospitalized, right? Okay. Okay. So getting back to the case study over here. So hospitalization, if you look at it, is a say suppose 2 times in the entire life. And let's take they are living up to even more than 70, 80 years they are living. But say suppose till the age of 70, they are all well, they're absolutely fine. And probably at the age of 70, both of them, they get hospitalized. Okay, only once in their lifetime. Each person, husband and wife. Children probably they become on their own, and then they become independent, and they are having their own family. So here the husband and wife, they are pretty good health, and they got hospitalized at age 70. This is an assumption. Okay, and current cost of any of this critical illness, we are a little more conservative. We say let's take an example of 5 lakh rupees. 5 lakh rupees for any of these critical diseases, if at all, need to be treated now. Okay, that's the situation. Okay, now how much this cost is going to be? If it is going to be after how many years? After, correct. It is when they reach age 70. That means after 35 years. So after 35 years, if you look at how much is this going to be? When we actually do it at the rate of inflation of 7.15, which I feel it is little more conservative right now. Okay, how much it is going to be? Any guesses? I just want people to type it in your chat box. Okay. Somebody said 15 lakhs. Somebody is saying okay, yeah, 25 lakhs, 30 lakhs. Okay. No, I suggest you one thing. Don't do any calculation. Just put it, whatever is coming in your mind, just put it in the chat box. Oh, okay. I'm actually saying, okay, 40 lakhs. Fine. Let's get on to the discussion here. Okay. So if we actually look out here, the same 5 lakh rupees of expenses which have been there will be costing 1 crore 11 lakhs 3,752. This is the cost. Is that a nightmare? It should be a nightmare. Nobody would have been thought that 2 hospitalization, being healthy for almost 35 years, and after 35 years you're getting hospitalized. Two people in family, husband and wife, one time each. if they get hospitalized, it is going to cost how much? Over 1 crore. Now, suppose if they have a 5 lakh rupee policy and they have been consistently paying for almost 35 years, will that policy will be able to suffice the required medical expenses? Think about it. Just type yes or no. Just type yes or no in the chat box. No, yes. No, they can't. Okay. So how are we doing? Like, even if you have a 5 lakh rupee policy, person is 35, if you say, I'm fine, I'm healthy, why do you have to take anything more than this, right? This is the normal question that we get. Okay, let me just tell you one thing. If you are healthy, only then you can purchase insurance. If the health deteriorates, you just can't purchase insurance. The insurance company will not offer you the policy. You might want to purchase it then, but insurance company will never offer you the policy. Insurance is a contract, there is an offer, there is an acceptance, and then there is a consideration which is paid for that. Okay? And insurance actually works ulta. It is different. It works exactly opposite. Whenever you want and you want to purchase it, you will never get it. Whenever you doesn't want it, that's when insurance companies will be after you to give you the policy. Okay? At any point in time, you can never purchase an insurance policy with money alone. It is your money and your health together. The healthier you are, the better the premiums you are going to get. Is it right? If it is right, just type yes in the chat box. Oh yes. Yeah. Thank you. Thanks a lot for participation. When somebody participates like this, that's when we always get motivated to do even better. Thanks a lot everyone who is actually there on this webinar. Thanks a lot for being participating. Thank you. Okay, so let's get into the case study over here. So this is the situation, right? So a 35-year-old person currently, how much of insurance do we need to have? 5 lakhs? 5 lakhs? Or is it 1 crore or even more than that? There might be a question. They are not going to be hospitalized right now. Why do they need to purchase the entire 1 crore policy now? Just hold for a moment. There is an answer for this, and this answer you will get it just little more time. Just little more time after that. Okay, right? Just bear with us. Now let's look into the second scenario. The second scenario, the same situation, right? 2 adults, 2 children, right? But here it is a middle-aged parents are there. It's little middle-aged parents are there in the family, right? So same 2 adults and 2 children, right? Here the husband age is 55 and the wife age is 52. Okay, and they have children of 25 and 22. And most of the policies they are now even covering the dependent children up to age 25. The children are covered in your same family floater policy up to the age of 25, or they become until they become an independent person, or they get married. So these are the 3 situations. They are still studying and they are less than 25 or up to age 25. We can still cover them under your family floater health insurance policy. And second thing is, if they got a job, they got join an organization, then until then it can be given, even if they are less than 25, but after that it is not given. And if they are married, then also they can't be covered under the same policy. Okay, I hope this is clear. If this is clear, I request everyone to type in clear in the chat box. Okay. Great, thank you. Thanks a lot. Okay, so let's get on with the discussion over the case study. So here is the situation wherein we have seen a middle-aged, middle-aged parents, wherein 55 is the husband and 52 is wife, 25 and 22 are the children, right? Okay, and even in this case, if they have a policy, and currently that's the age of them. Okay, so the current cost we are taking for our example, it is 5 lakh rupees is the cost of a normal hospitalization, which if anybody gets hospitalized. Okay, now if they were to get hospitalized only at age 70, right? That means it is almost after 15 years. After 15 years, if they are getting hospitalized, right, at the rate of 7.15% inflation, which is out there, how much is this going to be? Any guess? 2 hospitalizations, each person after 15 years, if they are getting hospitalized, how much? Just guess. Put it in the chat box. Oh yeah. Okay, somebody has put in as 15 lakhs, 20. Okay, fine, good, nice. So it is almost 28 lakhs 5,811. That means almost close to 30 lakhs, roughly. Okay. So each hospitalization will be costing almost 15 lakh rupees after 15 years. So it is the cost of the same treatment, same hospital, it will be increased because of the medical inflation. It will be increased to almost 15 lakh rupees. Right? Now, let's see another case. Let's say suppose somebody is 65 years, just retired, happy, and going around, now they are actually looking at to purchase the policy, because probably till now the company was actually taking care of their expenses, and now they are on their own and they have to take care of themselves, right? So here in this situation, only husband and wife and children have now become independent, so we are not considering them under this particular case study, right? So they have become independent. We are taking the same assumptions here. So 2 hospitalizations, that too at age 70, right? With a medical inflation of 7.15%. That is after 5 years, how much it is going to be for 2 hospitalizations? Yes, it is 14 lakh rupees. It has become 14 lakh rupees. Okay, right? So it is how much do you think you need to have? If you look into the average, how much of persons have got their coverage, if you look at it is 3 lakhs and even less than 3 lakhs. It is only from pandemic situation we have seen people started taking some top-up policies, increasing their sum assured, those kind of things where we are actually seeing only after the pandemic situation. But if you actually look through, if you actually look through the situation over here, okay, for a 35-year-old person, you need to go for almost a 1 crore of policy, and for 50 middle-aged family parents, where 2 people are there, they need to have at least a minimum of 30 lakhs. And people who are 65, the minimum coverage they need to have is around 15 lakh rupees. Okay, now we check. Check your own existing policies. How much of coverage you have? Is it really covering you properly? Is it good enough to take care of all those emergency medical conditions where you can afford to go and get the best healthcare facilities? Think about it. Right? So let's get into the discussion. Right? So this is a case study about the inflation. I hope this actually gives a pretty good picture, because numbers doesn't lie. Numbers always speak the truth, and this is the truth. If you're well prepared, you'll be able to face it. If you're not prepared, you'll go away from that. But you will still face the situation. You have to. Right? Okay. So let's look at this. So this is what people will say. Okay, see, for 3 lakh rupees kind of thing itself, we are finding the premiums a little higher. And if you are saying actually, for a 35-year-old person go for a 1 crore policy, for 55-year-old person go for a 35 lakhs kind of policy, 60 years 15 lakhs, it's all good to say it. The premiums are always high. How are you going to handle it? Correct. Let me just have a question for you over here. Do you really think the premium is costly? How about paying it to the hospital? Will the hospital be able to provide you the kind of facilities which are required at what are the little coverage that you have? It is more costly if you have to pay it directly to the hospital. Let me just repeat it to everyone. It is still cost effective if you are paying the premiums on a regular basis, on a yearly basis, rather paying a lump sum money to the hospital. Paying premium is much cost effective than paying the hospital bill. Paying hospital bill is costlier than compared to paying premiums on an annual basis. I hope this gives you the clarity, right? Okay. If you say yes, you agree to this, just type in yes in the chat box. Thank you. Thank you. Thanks for doing that. It's so nice. You're such a nice people on this webinar. I'm feeling so good interacting with all you guys. Thanks a lot. Okay. So, how are we going to do it? Let us do some more analysis on this. Okay. When we do an analysis over here, right, we need to look into a particular point called as what is the premium per lakh. So, premium per lakh is something which you need to calculate for what are the sum assured that you are purchasing from any of the product of any insurance company. So what is a premium per lakh? So this is the word, okay? Just remember this, premium per lakh. Then you will understand which one is more costly and which one is more cost effective. Let's look into it. If you look into that, let's have again the three scenarios over here, right? The case one is about the young family. And then the case 2 is about the middle-aged family, and then the case 3 is about aged family, right? So whatever the scenario that we have checked it for the kind of inflation thing, it's the same case study that we are going to extend it for even analyzing the premium part. The case study 1, okay? The family is 2 adults, 2 children. It's the same 35-year-old, and then wife is 32, spouse is 32, and children are 5 and 2 years, okay? This is the situation, okay? If they have to purchase a 5 lakh policy, and here we have actually taken the largest sold family health insurance policy in India. We have actually taken that, and then we have actually considered these premiums, and we have also seen whether it is comparably a real good in kinds of the benefits what it is offering. So it is not a specific insurance company that we are looking at. It is the average cost of the best sold health insurance policy in India. Okay, and if you want any more details on this, you can always give a missed call on the number which is mentioned out here. It is 7569 645 645. Right? It is 7569 645 645. This is the number on which you have to give a missed call. Me and my team will be always there to help you out and help you to choose the right product for your situation. Okay, right. So here coming to the case study over here of so for a 5 lakh of policy, if you look at for a person age 35 for 2 adults and 2 children, you know what is the premium? It is 17,464. We have considered GST also into the premium. Okay, so this premium what we are mentioning here is inclusive of GST. Okay, so what is the premium per lakh? Premium per lakh 3,493 rupees. So we divide it straight by 5, right? Okay. Now let's look at if we increase the sum assured, what is going to happen? If you are going for a 10 lakh rupee of policy, okay, then the premium is going to be 24,686 rupees inclusive of GST per annum. So how much is the premium per lakh? It is 2,469. Is it right? 2,469. Okay. Now, if we increase the sum assured still further, I know, people are getting really energized over here. See, we are increasing the sum assured over there. We are increasing the sum assured over there, and the premium is actually per lakh is actually decreasing. That's the beauty. That's the beauty of insurance. Okay, right? So, if you go for a 20 lakh of sum assured, right? How much the premium? Is 33,701 rupee with GST. So, it is costing 1,685 rupees per lakh. Per lakh. It is almost reduced by half. The sum assured got increased 4 times and the premium per lakh got decreased half. Is this really worth it? Is this really worth it? Think about it. Think about it. Do you want to purchase a product with the low cost? This is the low cost. Wait, there's still more to come. Okay. For a 50 lakh policy, for the same people, 35 years, 2 adults, 2 children, how much it is? 40,580 rupees is the premium. So how much it is per lakh? 812 rupees only. The premium, the sum assured got increased by 10 times. The sum assured of the premium, the sum assured got increased by 10 lakhs and the premium got reduced by how much? It's just 812 rupees per lakh. Yeah, it is per lakh. Yeah, somebody is stepping. It is per lakh. Yeah, it is per lakh. And all these numbers which are mentioned here are original. You need more clarity on this. You need more information on this. You can always dial up 7569 645 645. This is the number on which me and my team, we are always available. Just give me a missed call. We'll be always there to help you out. Okay. Now hold. There is one more thing, because we say for a 35-year-old person we need to go up to sum assured of 1 crore. 1 crore, right? So 1 crore. What is the premium per lakh? It is just 471 rupees only. When you are actually paying a premium for 5 lakh rupees, it is costing you 3,493 rupees per lakh. And when you are going for 1 crore, it is costing only 471 rupees per annum per lakh. Now you tell me, is premium really costly for the kind of coverage what you are going to get? Let me tell you. Most of the times, we always think you go for the higher sum assured. This is a mental block for all of us. The premium will be very high. I just can't afford it. It's not required at all. This is what actually goes on in the mind, isn't it? Right? The reality, if you look into, even the premium is increased by 20 times. By 20 times. The premium per lakh got decreased by almost 800 times, 800%. Is it something not fabulous? That's the reason. Look into the numbers before you talk to yourself. The numbers are here. Now you tell me whether the premium is really costly when you go for a higher sum assured. Never. The premium always comes down. Is this a good enlightenment for all of you? If yes, please type in yes. Please type in yes. Oh yeah. Oh, thank you. Thanks a lot. Somebody has actually written, this is the first time that we got to see that the health insurance policy is so costly. Thanks a lot. It's not me. We need to thank all the insurance companies who have actually designed it, all the actuaries who have actually designed the product, and then we need to thank them. Okay, thanks a lot. Okay, so let's get into the discussion and go further. So premium costly. Premium, if you increase your sum assured, the premium also increases exuberantly. No, that's a myth. Premium per lakh will get reduced drastically if you are going for the highest sum assureds. So always, if you want to get the best value for your money, go for the highest sum assured. And how much of sum assured to be taken, and how much and which product, and what to do, what not to do. You have any queries, you can always call. You can always call up this number over here. It is 7569 645 645. This is the number of me and my team. Will be always there to help you out. We do not represent any insurance company. We only represent your requirement. We want to service your requirement rather working on the targets of the insurance company. We never do that. Are you with me? Right? Okay. We are always with you. We are always with you. Let's get into the discussion. Right? Okay, so premium costly is now a myth. Thank God the numbers which has been there. Okay, now let's look at the case study 2. Okay, the same structure over here, right? A 55-year-old person going for a 5 lakh policy is almost costing him 6,648 rupees per lakh. And if they go for a 1 crore policy, it is 800 rupees per lakh. Which is cheaper? Tell me which is cheaper. Type it. Is it higher sum assured or is it the lower sum assured? Which is cheaper? Oh yes, higher sum assured. Thank you. Thanks a lot. Okay. Case study 3. Even at the age of 65, 2 adults, if you look at, for a 5 lakh policy, it is almost costing them 9,157 rupees per lakh. And they look for a 1 crore policy, it is 1,070 rupees per lakh. And all these premiums are with GST. With GST. Okay? Right. You need more details, just dial up this number 7569 645 645. We'll be there to help you out. Okay? Now, this is another thing what we always get it. It looks so nice. Like now you need to go for a higher sum assured. The premium per lakh is coming down. Each of these things are fine. But can we actually continuously pay the premiums over the period of time? Can we actually do it? Can we sustain in paying the premiums? This is another question what we face, isn't it? Right? Let's address it. Let's address this. Can we pay consistently over the period of time for the lifetime? All your health insurance premiums, right? Do we pay to hospital in emergency by any which way? Do we type it in chat box? We do. We do. Right? In an emergency condition, come what may, we'll squeeze in all our assets. We'll go and bargain. We'll go and beg, borrow, but we'll get that money to treat the loved ones who got hospitalized. Isn't it? Right? Okay. So, can we pay for the lifetime is something which you have to answer yourself. Can you afford not to provide the emergency medical healthcare services, and that to the best medical healthcare service to the family members in case of any emergency? Right? If it is yes, can we do it? Yeah. Then you have to pay the premiums. Otherwise, you have to pay that lump sum money to the hospital. Which one is easy? Tell me which one is easy. Is it paying small premiums over the period of time every year? Is that easy, or paying lump sum money to the hospital? Which one is easy? Tell me. Yeah. Paying every year, that makes sense. That's logical. Right? Okay. So, let's look at, we did a small calculation over here. Wherein we really wanted to check how much a particular person will be paying the premium over the period of time. If say suppose he started the policy at age 35 with spouse and 2 children together, and then he keeps on paying the premium till age 100. Okay. How much will that person be paying? We have taken the same consideration of the same best sold product and best loved health insurance product in the market. Okay, so we have actually considered that as an example in calculating the premiums. Let us evaluate that. Okay, right? if you look into that, okay, so we need to look at the total premium paid. What is the total amount of premium which is paid to the insurance company? And we'll look into the same 3 scenarios over here, right? The same families, like the younger family, the middle-aged family, and the aged family. Okay, right? We'll look into that. Now, this is what the young family will be paying. The person age 35, you can see on the right side corner. Okay, it is left side for you on that. Okay, so there is age 35. Okay. 2 adults, 2 children, and we have considered by the moment they come to age 56, the 2 children are on their own, so they become independent. So from there, it is only the 2 adults who are going to be there in the policy. Okay, if that is the situation, the moment they reach age 100, you can see down over there, right? Okay, the total premium, what they will be paying in here in 5 lakh, if they take a 5 lakh policy, the total premium what they will be paying for the entire till they reach age 100, it is 16 lakhs, sorry, pardon me, 16 lakhs 79,404 rupees. And all these premiums are with GST. With GST, okay? And if say suppose they are paying a premium, taking a policy of 10 lakh rupees. So they will be paying 24 lakh 75,200 for the entire life. Okay. If they go for a 25 lakh policy, okay, they will be paying 30 lakhs 11,038 rupees. If they take a 50 lakh policy, they will be paying how much? 33 lakhs 12,282. And they go over a 1 crore policy. See over here, right? 1 crore policy. They will be paying how much? 38 lakhs 45,607. Now you tell me. Going for a smallest sum assured, is that better? Is that a valuable sense in actually going for a smaller sum assured, or going for a larger sum assured, which is best? Because the total overall premium paid. See, there is a thumb rule calculation. The thumb rule calculation is whatever might be the sum assured that you take, the total amount of premium paid should always be less than the sum assured. The total amount of premium paid into the policy for your lifetime should be always less than the sum assured. If the premium paid is more than your medical insurance sum assured, that means you are actually at loss. You are paying more money to the insurance company. Rather, you are getting the better benefits from the insurance company, you are paying more. So go for the highest sum assured. When you go for the highest sum assured, like you have seen it in the case study over here, a 5 lakh rupee policy, they will be paying almost 16 lakh 79,000. Roughly around 17 lakh rupees is what they pay. And for a 1 crore policy, they will be paying how much? 38 lakhs. Which one makes sense? Right? So, in the first case, the premium paid is 3 times the sum assured. The last case, the premium paid is 1/3 of sum assured. Which is the best? Think about it. Okay? Let's see even the second case. And even if you look at the case study, what we have seen in the same discussion over here, we said we need to have a coverage of 1 crore for a person age 35. Is this actually matching? Is this actually matching over here? Like, does it making sense to go for a 1 crore policy rather than going for a 5 lakh policy? It makes sense, right? Okay. So this is what we have actually discussed in the first case, right? Now, if you look into the entire lifetime, the premiums paid are much less when compared to the kind of coverage what you are going to get. Okay. Now let's see the case study 2. Okay. This is if the person is age 55. You can see it out there. The person age 55, if he starts taking the policy and if he goes for a 5 lakh rupee policy, how much will he be paying? 11 lakhs 85,000. 11,85,536 rupees. Okay. And if he goes for a 10 lakh, it is 17 lakhs. A 25 lakh, it is 20 lakhs. For a 50 lakh sum assured, it is 22 lakhs 41,000. And for a 1 crore sum assured, it is 26 lakhs 2,485. And if you remember what we said, they need to have at least 30 lakh of minimum coverage. So if you look into this thing here, because the 30 is not there, we can actually see it here. 50 lakh sum assured is something which is the minimum what we actually recommend. Okay, is it fine? Okay, and if they want to go more than that, it is up to them. We don't stop them. It is good, but a minimum of 50 lakh, right? And in the case study 3, a person age 65, if he goes for the policy of say 5 lakh rupees, he'll be paying how much? 8 lakh rupees he'll be paying. He'll be paying more in a 5 lakh policy. Even in a 10 lakh policy, they will be paying more. That is 11 lakhs 81,000. So 25 lakh is something which is really proven to be good. You can see the numbers over here. So that's the real point wherein, and that's the reason why it is being mentioned. The amount of premium is being mentioned in yellow, right? So that's the sum assured. 25 lakh is something which is taken. Then they are in profits. And if they are not getting hospitalized and they keep paying, they live up to age 100. So this is what they will be paying. Okay, right? So we said 15 lakh rupees, but when we actually did the calculation over there in the total amount of premiums paid, this is the sum assured of coverage they need to go for a 25 lakh of coverage for both the parents together, husband and wife, right? Is this a good amount of realization and the facts which actually proves that higher sum assured, going for a higher sum assured is always better, and the real value for money for whatever the premium that you pay. Within that, go for the highest sum assured. Go for the highest sum assured. Right? Okay. So let's get in over here. So you want to be always happy, right? And protect the dreams, what you dreamed for your family. You want to do that. And you want to give them the best healthcare services in case of any emergency. The best hospital, the best treatment, the best doctor. Go for the highest sum assured. Because our family, my family, is my responsibility. We can't depend on the corporates, we can't depend on the government. Of course, they are good, they are also even supporting us to actually being taken care. But ultimately, my family, whose responsibility? My family is always my responsibility. And you want to look through the details of whatever the products that you have already purchased, and you want some more clarifications on your existing policies. Don't get worried. We are always there. You can just dial up this number. It is 7569 645 645. Me and my team, we are always there on a missed call. We'll call back and we'll help you out in getting through your details and analyzing your situation. Is it right? Okay. Now, so coming to the conclusion part over here. So, how much of health insurance do we need to have for our family, and how much is it required? So, let's go for the conclusion over here. Consider all these factors. Consider your current age. The personal things is your current age, then your family health history. If say suppose there is a health history, I'm not a doctor, but still, if say suppose there is a health history wherein there is a regular disease which we have seen in the family, and it is coming from forefathers to the parents, there is high chances that we may also get. It's genetical constitution what we have. Okay, if such things are there, please do consider and have a coverage right now, the highest coverage in place. Because you cannot purchase a policy when you want it. You have to purchase the policy when you don't want it. Because policies can be purchased. The insurance policies can be purchased only not just with your money. It is your money and your health. Both of them together. Right? Only with money, nobody can purchase the best health insurance policy. Okay, with that note, let's go to the conclusion part over here. So the personal thing, it is your current age which you have to take care. Your family health history you have to consider. Then your family size, how many people are constituting in the family. So what is the amount of coverage each of them they have. Is it a floater coverage? If it is a floater coverage, is it a larger floater coverage or is it a smaller floater coverage? How is it being designed? So look through that, right? Consider the factor of inflation. Inflation is something which will eat away the real value of your coverage. Okay, so it is an unseen theft from the policy. Okay, and then the premium per lakh. So the the cost-effective ways, have a higher sum assured so that the premium per lakh paid is always lower. Okay, then what is the total amount of premium paid in the entire lifetime if we were to pay the premium for our lifetime? So what is the amount of premium that we will be paying? Is it more than the sum assured what we are purchasing, or is it less than the sum assured what we are purchasing? And we need to always choose that sum assured where the total premium paid for the lifetime is going to be less when compared to the sum assured. Is it enough? Is this a good information for you? If yes, just type in yes in the chat box. Oh yes. Thanks a lot. It's so nice. We have such beautiful people on this webinar who are so interactive with us and supporting us with this webinar series to go further consistently. We thank each of them in person. Right? Thank you. Thanks a lot. Okay. So, but at the same time, before we get in, there are also some cautions which we have to give. Okay. The cautions are whenever that you are going for the policy. Okay. We want to provide give this. Sorry, excuse me. The caution is, do not just focus only on today's low premium. No, because today we are all fine. The coverage what we require under the health insurance is not for just now. It is for the future. And in future, the cost of medical expenses is actually increasing. When it is actually increasing, then if you have a flat coverage in place, it will not suffice the requirement which is really needed in future. Okay, I hope this makes a lot of sense to each of you, right? So do not just focus on today's low premium of your policy. Do not just rely only on your corporate policy or your government health insurance. They're good. They're good enough to give you those coverages. Thank them. We really appreciate. From this program, we really appreciate all the governments and all the corporates who are actually providing the health insurance facility for their employees and to the people. This is really good. We thank each of them for doing whatever the benefits that they are offering it to their public and also to the employees by the corporates. We thank them. We appreciate your work. But how long can anybody do it consistently? Ultimately, my family is whose responsibility? My family is my responsibility. How can I make it responsible for the government, or how can I make it responsible for the corporates where I work? No, my family is my responsibility. Along with that, I should also have a policy for myself and for my family members. Okay? So, and parents first. Always have the policy, the health insurance policy for the parents, because they are more prone for the medical expenses, medical departments. So, always have parents as first, right? So take the policy for the parents first, and then for yourself and for your spouse and children, right? And it's worth paying the higher premiums. Don't look for only the lower premiums. It's worth it, because overall you will have a better coverage for whatever the premiums that you pay for the entire lifetime. Okay, and then intermittent increase. I've actually seen the people. Okay, that's okay. We will start a policy with 5 lakh rupees. Probably next year I'll increase it by another 1 lakh. Next year I'll increase it by another 1 lakh. Probably after 5 years I'll increase it by another 10 lakhs. So as and when I'm actually growing older and the probability of getting hospitalized or the medical risk is more, then I'll start increasing the premium. Congratulations for your plan. May God bless you. But if, say, suppose there is any sudden medical emergency that turns up and you have become uninsurable, who is going to increase the sum assured? Do you think the insurance companies will offer you a better coverage? No. When you are healthy, that's when you need to have a higher sum assured coverage for yourself, not just for you, it's for your entire family. I hope this is very clear. Need any help? Me and my team, we are always there. You just dial this number 7569 We'll be there to help you out with the consistent and real good advice from our side. We do not represent any insurance company. Okay, so with that, so the action points, what we are supposed to take in. First thing is, take out your policies. Take out your policies, review them once. Ask your advisor to come home once for a coffee or tea or dinner. Just ask him to come in and then look through evaluate your policies. Evaluate your policies. Okay, so this is something which is mandatory. Then review with your advisor. Discuss with your family. This is one thing we always say in all our webinars. Discussing insurance on dining table. This is the culture what we want to promote with all our clients, with all our relatives and the friends and the clients. The reason because you purchase a policy, but say suppose you are in an emergency condition, will your family people in a position to take care of you? If only you know entire details, what about them? Do you see them? Do you want them to go here and there to actually ask for the help? No, right? No, right? So just discuss all your insurance policies with your family, and then keep it in a place. Keep it in a place where everybody can access those things. Look into the network of hospitals. What you have? What are the nearest network of hospitals? Take out their names and numbers and put it onto your policy copy. Keep it ready and make all these details available to your family members. Okay, right? And with that. So we always quote this in all our webinars. So my family, whose responsibility? Can you just type it in the chat box? Oh yes, my family is my responsibility. It is my responsibility, right? With that note, we thank you everyone who attended this webinar. And we look forward for the next webinar. It is going to be on 2nd and 4th Saturday, 4 to 5 p.m. every month. Thank you. Thanks a lot for joining us in this webinar series. Thank you.